In this chapter, we really want you to learn the difference between a debit and a credit and what we do with them. So make sure all your ideas of the debit card, credit card, just disassociate that. Let's start from scratch. And first let's look at where debits and credits go. When we talk about a T account, these are the accounts that we're going to keep track of all of what's happening in each account in there. For example, we have cash. We're always going to put the debit on the left, credit on the right. So when they say a debit is on the blank side of a T account, a debit is on the left side of the T account. A credit is always on the right side of a T account. When they say double entry system, all that's saying is that there's always going to be two transactions at least, because your debits always have to equal your credits. And the normal balance is the side in which increases are recorded. So if I want to increase my cash, I would debit it. If I want to decrease my cash, I would credit it. So we have to really understand the normal balances for each of these accounts. This is helpful by learning this acronym DEAD. Accounting makes you feel dead, where debits will increase in expenses, assets, and dividends. This means a debit will increase these and only these accounts. Anything else is going to increase with a credit, and that means your common stock, your liabilities, your retained earnings, your revenue. So let's go through this. You can define each one of these again. The more we understand what each account is used for and what happens within those accounts, the better we will be. Again, an asset is something we own or control. It increases with a debit and then decreases with a credit, because cash, we know, is an asset. Let's look at the liabilities. Liabilities, again, something we owe. Usually you see that word payable. Liabilities are not on this list here. It's not one of these where the debits increase. So we know liabilities actually increase with a credit. That means they would decrease with a debit. So when I'm looking at a T account for a liability, and we can include any payable here, your debits are still going to be on the left, credit still on the right, but a credit is going to increase, a debit will decrease. This all goes back to chapter 1, the accounting equation, and making sure that stays equal. So you go ahead and fill in the rest of this chart. If you have questions on it, send me a quick email. Let me know. We'll make sure you get it right. Now remember, anything that has a normal balance will increase that account. So if you filled out the top of this chart right, you should be able to then take it kind of one step further and fill in each of these accounts, what their normal balance is. This is going to be extremely helpful to you on that first exam. And to be able to get this down will be helpful to you the rest of the semester. Once you know what increases and decreases these accounts with debits and credits, we can get into journal entries. I left some space here for you to kind of take notes on what makes sense for you, because everyone looks at this a different way. Some people like to say, here's my T account. Yeah, debits are on the left, credits are on the right. Some people use the acronym ACTOR, dinner, everyone, let's read, it's an L. Let's read comics, because this is my assets, dividends, expenses, liabilities, revenue, and credit. Or common stock, are all credits. So whatever works for you, jot down some notes so it makes sense, because we'll need all of this to do our journal entries. So let's do some journal entries. As a reminder, when you're doing journal entries, always list debit first. And always make sure debits equal credits. So that first step is to analyze. So for number one, we invested $10,000 in exchange for common stock. We have to read through this, pull out the two accounts. I see some cash and I see common stock. So I'm increasing the cash I pay for my business, and I'm increasing that common stock. Common stock increases with a credit. Again, let's find the two things that we're looking at in the second one. We have equipment, we have cash. But here I'm purchasing equipment, which is an asset. I'm going to increase that equipment for $700. I'm going to decrease my cash. I can decrease cash with a credit. Go through, find the two accounts that are affected. I have supplies, but I didn't pay cash for them. Notice that. Anytime you see the words on account, that means you're going to pay for that later. Supplies are an asset. I increase with a debit. On account means I'm going to pay for it later, which is an account payable. So moving on to number 4, we performed services for a customer and we received $3,000 cash. If we have performed services, that's revenue, and we receive cash. Oops. So I'm increasing my cash, which is an asset, and I'm going to increase my revenue with a credit. Whenever you see the word paid, usually you pay cash, right? We paid salaries. So those are the two words we're looking at. The first one is going to be an expense, usually called salary and wage expense. We're increasing those expenses. We're decreasing the amount of cash we have with a credit. Now, number 6 says we paid $200 of an amount owed in transaction 3. If I look up to transaction 3 here, we bought supplies on account. We need to decrease the amount that we owe. So I'm going to debit that account payable, which would decrease the amount I owe. And I'm obviously going to pay them in cash. Again, we performed some services. Now notice here, we performed services, that's revenue. We received money and sent a bill. This is just an example that you don't always have to have just two things happen. It could be split up into multiple transactions, multiple accounts. So here we received cash. We'll increase that amount. they still owe us $2,000. They're going to pay us later. So I will increase my account receivable. And this is all revenue. Paid, again, if you see the word paid and you don't see on account, that's going to be cash. So I'm going to increase my rent expense, decrease the amount of cash I have. Two more. This one, number 9, is referring to number 7. We received cash. So we're increasing our cash. And then we are going to decrease our account receivable by $600. And finally, we pay dividends. Again, if we pay something, we're usually paying them in cash. So we increase our dividends and reduce the amount of cash we have. So we're analyzing, we're journalizing, and now we're going to post this. When we post, we want to make sure we're taking each and every journal entry and then bringing them down to our accounts so that we can see what a final balance is in each account. So I'm going to start at the top. We're going to take each one individually and post them. So cash, I'm increasing with a debit, and common stock, I'm increasing with a credit. So I'm going to put in my 10,000 here, find my common stock, which is just CS on here to save space, and increase that by $10,000. The second one, I purchased equipment for cash. Going to increase that equipment, decrease my cash. The third one, I'm going to increase my supplies, increase my accounts payable. And it was, I forgot the amount, 400. Next, I'm going to increase cash and increase my revenue by 3,000. You notice each one has that debit and credit. They're all remaining equal. Okay, now I'm on number 5. We paid some salaries. So that's my salary and wage expense and cash. And then I have my accounts payable and cash. So you notice here, whoops, yeah, that's right. My accounts payable, it's okay that I have that debit there because that's just decreasing the amount I owe. Number 7 is cash, accounts receivable, and revenue. So my cash is increasing, my accounts receivable is increasing, and my revenue was increasing. Now I have some rent expense and cash. And finally, 2 more. I have some cash and accounts receivable. And dividends and cash. Now I know this is tedious, but if we don't do this slow and make sure we have everything right, then when we start adding these up, it's going to be very difficult to get the right numbers. So let me show you how we're going to look at the account balances. You only get one number per account when you're done. So like cash, we see some debits and credits, but I know cash has a normal debit balance. So I'm going to add up all my debits, subtract my credits. I should end up with something on the debit side. And that amount is 10,400. If I add all these up, subtract those. I'm going to do the same thing with accounts receivable. 1,400. So you only get one number for each account. Supplies do not change. Equipment doesn't change. Accounts payable, because this is a liability, these are my increases, these are my decreases. Common stock, my revenue, add those up. Expenses, add those up. And dividends. And then we want to make sure that we posted everything accurately. So we will do a trial balance. Your trial balance does have a name, you know, just like all of our financial statements. Tell everybody what they're looking at. And this is just like the balance sheet. It's going to be as of one date. I think this is just for the month. I forgot. Yes. So we would say January 31st. All right, then what we're going to do is list out every account we have here with their balances. So I can say I have cash, and that cash, oops, wrong line. And that cash has a debit balance of 10,400. I have accounts receivable. That has a debit balance of 1,400. I have some supplies. The balance of 400. Equipment. A debit balance of 700. Then I have my accounts payable. And that has a credit balance of 200. I have common stock. That has a credit balance of 10,000. I have revenue. A credit balance of 5,500. I have these expenses here. A debit balance of 2,500. And then I have some dividends, which have a debit balance of 300. I'm going to go make sure I transferred everything, which I think I did. And then your next step is to add up my debits and add up your credits to get a total. The whole idea of the trial balance is to make sure your debits equal your credits. If I add these up, I should get 15,700 on each side. And then you know you're done. That's it for this chapter. It's going to take a long time to do this posting, but I really, really want to make sure you get the debit credits down, as well as how those translate into journal entries. So if you have questions, please let me know.